Hello, Warriors. Hello, Face. How's everyone doing? Hi, Kevin, Patrick, Ziggy, everybody. Hello, Windsor. Tico, how's it going? Okay, so currently disappointed. I just want to take you through my thought process here of the analysis I provided to the community this week. Hello, Andy, Conrad. So earlier in the week, I said my bias was higher in Euro Pound. Okay, I thought we'd go the 90 level. It's 1.272. We've overshot it. And that's why EG, whether you're trading it or not, is so important for biases. So because I had a bullish bias in Euro Pound, the preferred short for this week was the pound. And I said stops over 32.70. It got to 68. Also said cover part of your position before the BOE. So if you did it in here, maybe you took a loss on half of 20 pips and you're up 80, 90 on the second part of the position. So I think this is significant in the pound. It may mark an important high in the pound. And then I also talked about the yen crosses and pointed out the guppy. So, you know, if my preferred short is pound dollar on yen crosses, my preferred short is a guppy. Here we are. So besides being right, yesterday it peaked. So besides these candles, you probably go, oh man, I missed it. Well, now you look for recoveries to get short. And here's the reason why. Hi, Ash. I want you to take a little macro look at guppy. First, let's go to the daily. The daily, you know, we had this big break. We recovered almost all of it, lower high. You know, looks negative to me. This looks like a failing rally, second lower high off this peak. Let's bring out the telescope. Here's your weekly. And when you look at this, the big decline from 96 down to 24, this is about a 38% retracement. I didn't do the fibs on it, but really when you think about it, it's pretty weak. I think Steve would say pretty impulsive decline, choppy corrective, sideways action, works off the oversold condition more in time than price. And actually my view is that we're going to take out this low if it's a continuation formation. So I think it could be. 140 is going to be the key, but once we start taking out 140, I think you could look for new lows. I think that's 26. And finally, here's your longest term view, your monthly. And as you know, we get caught up when we only look at the hourlies, and from here, you know, there's been some decent action in the guppy off the lows, but really when you look at it, it's pretty weak. So, you know, it's my belief that we're going to challenge and take out these lows. So really it's just beginning in my view, and now you have a real nice stop loss point when you get back to the hourly. If you could sell some type of retrace, you certainly want to be out of the way at 146.80, and if you took it, I would be booking half and looking for fib retracements, maybe back towards 580 to get this position on. Also talked about Aussie yen, but it did not accommodate me for better levels to short into. I wouldn't be short this one down here. I still think maybe if Aussie does what Greg had talked about yesterday, there'll be better entries. But I remain a super bear on guppy. 120, yeah, that's what I'm looking for, Jess. So, you know, like I said, I'm a big believer in concentrating on a few pairs at a time, and I have a high conviction rate for that monthly supply zone you're talking about, Jess. So, you know, call me Mr. Guppy. I'm going to really stay on top of this and sell rallies all the way down towards that target. Try and hold at least a core position, you know, keep your half that's your core position from the high, and build it. Hardianto agrees. Hardianto's a great technician. So there's some phase confluence with the community. I haven't taken a look at FA's analysis yet on the guppy, but I wouldn't be surprised after this week's action. Yeah, so it could just be outright short pound, right, V? Okay, so Dixie still trying to bottom. Still think there'll be an opportunity tomorrow. Ideally, what I'd like to see is a miss in the NFP, and they take the dollar down on the miss and look for buying opportunities on weakness on a weak number. If it's a strong number and the dollar goes from here, so be it. You know, still have, you know, if you listen to what I had to say and you thought it was worth a shot, you're still long the dollar through the short on the guppy and pound cable against USD. So tomorrow's NFP, again, you're going to want to pare down positions in front of the NFP, and we'll look for opportunities. Maybe the NFP will provide it for us. So everyone doing okay? Hope everyone's having a great week. I have an excellent guest today. He's the author of The Canadian Technician, Greg Schnell. Stick around for that. I went to his site. This guy's a great chartist, and wouldn't be surprised, like many other guests, he provides you with some food for thought for some actionable ideas in the market. If you're enjoying our interviews, give me a Y. I was just looking at all the interviews we've done in 3.5, 4 months. In my extremely humble and accurate opinion, they provided some very compelling content with their giving spirits to contribute a face. David Brady, Jeff Cooper, Peter Bookvar, today Greg, tomorrow Chris Laurie. So I'm glad you guys enjoyed the interviews. If you feel it's adding value to what you're trying to accomplish as a trader, click the sign up link, because I'm telling you that it's priceless to have Blake's, Steve's, Grega's, Stelios's, and Nick's work at your fingertips. I hope I don't, Conrad. If I do, I'll invite others back. Most are happy to return. Lydia Idem Finkley, we're going to have the female trader back. I've already had Mark Newton back. I'll ask Jack Schwager to come back. Trying to get Jesse Livermore. Also trying to get W.D. Gann to show up here for an interview. I'll do my best. And with that being said, guys, become a subscriber to ForexAnalytix. Martin Armstrong, I've tried, yes. He's got a relationship with FX Street, so I think he considers us competition, even though we're contributing on FX Street now. I'd love to interview Marty again. But maybe, Arif, you can reach out to him for me and say that, you know, Dale's been trying to reach you. We have a great, he'll get great visibility. Oh, I appreciate it. See, that's what a community does. They support each other. Okay, thank you, Arif. And now that you've seen my mug, I'm coming off camera here. And I'm going to pass the ball to one of my trading idols, Blake Morrow.
Idols.
One of my favorite guys to interview when I was on FX Street, Blake Morrow.
Idols, come on now. How you doing? You're speeding me full of crap now. I can tell when the crapometer is running high, and right now it's running high. So
that's why I had to come off camera when I said that.
All right. Yeah, I know you were probably sticking your tongue out and like giving yourself the barf look, you know.
Yeah. Well, okay, all right. I admire you. Okay, you're not my idol, but I admire you, and I always learn from you. So, okay, you're not my idol.
Barphometer. Okay, so
I can tell you one thing, that my son plays almost daily with your bubble head.
The bobblehead.
Yeah. Steve, did he throw up on it? That's what I want to know.
No, he has thrown up everywhere else this past few days, but not there. That says a lot.
You know,
what do you think, Blake?
If you hold on really quick, I was gonna see if I could find an image of the Blake Morrow bobbleheads. I don't have one.
I want one.
You know, they're limited edition. There was 500 of them made at the time, and MB Trading, before they bought Wise Trade, they made them as a kind of a promotional gift to currency traders. And I think I would trade. I think I would trade better with one of those on my desk. How about you, Face? Everyone in Face wants one. The thing is they there's like 500 of them, and based on how the markets move and how people trade, I'm assuming that those, because they're ceramic, I'm assuming they're very few in existence. I could only imagine people have grabbed them and thrown them across the room and shattered them.
That makes them a collectible now, man. They might be for sale on eBay.
I probably have. I have a few of them left, like 4 or 5 of them left that I've kept, and there might be a couple straggling around. I know Steve has one that I sent him years ago, but yeah. Anyway, hey, but let's talk about the markets, not about bobbleheads. If you guys haven't seen the euro pound, we are racing higher. We broke through the 90 pence level, and as the pound's just getting hit following the Bank of England. I mean, it doesn't matter what really Carney is saying at this moment. The market sees the Bank of England as being dovish. The vote was 6-2. The pound hit 161% extension and has reversed quite aggressively, and frankly, the euro pound is right here at a 786 retracement. Now, before you get too hot and heavy about the euro pound, though, keep in mind that the relative strength is divergent here on this move higher. And yeah, we noted it on ForexAnalytix when it broke out this morning. So here's the where is it? I just had it just a moment ago.
With all these pairs, it's harder to find them, right?
It is. Yeah, it is. It's like, where did my euro pound go? I know I have it somewhere through here. Where the hell?
This is how I usually show the website.
No, did it get stuck in my inactive ticket? No, now I got to find it. Okay, there it is. Gosh dang. Okay, so if the 1 hour chart, you can see we were breaking, we're hitting that 90 pence level, and it says we've quickly moved to, euro pound testing the 90 cent level resistance following the Bank of England decision. Keep a close eye on this one. If we break out, boom, we break out, and here we are, approaching that. What you guys are seeing right now is the divergent relative strength as we move higher. So I just want to. Yes.
Sorry to interrupt, but since you're there, show them also our analysis on the cable from yesterday, and also our signals for the cable, which, despite having rallied for a long time in a row, all our analysis was neutral because most of us were more or less expecting that we're close to a reversal.
Okay. Yeah, I'll go into that in just a minute. But the euro pound. I want to point out what's happening at this very second is that we're approaching that 90.35 level. So you guys got to be really careful about being too long up here. If I was long the euro pound, I'd probably be, strongly considering moving stops up to break even at this point, because
like when we were real bullish a few months ago and looking for these levels, wasn't this around Nick's target A long-term target above the 90. I know you were talking above 90 on the way up as a possibility.
Yeah, I mean, this is, weeks ago I was talking above 90, and I was a little concerned with it a few weeks, two weeks ago actually, as we were kind of making these like false breaks here, and I mean, it got really choppy, but I remember Nick's longer term targets were up at these levels, and I can't remember her analysis now, because if I go to the heart, whoops, shoot, I didn't want to do that. Hold on one second. I didn't mean to close that.
That was one of the reasons I knew the general area when I saw it as constructive, and Steve got out of the way very well. The only thing you could have done that would have been better, Steve, was to reverse.
I wouldn't do that, Dale, because I believe that the euro pound is not far away from a high as well, as more or less Blake implied as well.
Yeah.
Yeah. So she was like, "Oh, here we go. We just hit the euro pound. Just hit that resistance." She was, this is her weekly view. It pointed above 90 pence or 90 pence in a long time. So. Bullish break, the symmetry targets 90 and 91.85. That's back in July. Yeah. So she's been very bullish, the euro pound. Wow, I mean, it just is continuing higher. And the euro is benefiting right now. And let's talk about the euro really quick. I still maintain a short in the euro dollar, but the euro remains elevated because of the euro pound. We're getting a lot of cross rate effect right now. But if you look at just like the hourly chart, and we're just skating along an uptrend line. So as long as we're continuing on this uptrend line, it's fine. It's if we break below 118.30, that's when you're going to start to see a little bit more of a pullback in the euro dollar per se. I think if you come down through this support, but that's not happening right now because obviously the euro pound is dragging the euro up at this moment. So the other thing about the euro dollar, and if you guys didn't see this from yesterday, we hit 161% extension. This is from, now I want to point this extension level out and why it's so important. You see where we spiked up to yesterday, and we literally spiked up to this high. The reason why this area is so important is because this is the election night high to the low following the election, and we hit 161% extension. Now, we're there, right? Well, we hit there yesterday, but it really kind of shown a reversal yesterday. Now, again, in order for the euro to continue lower, we're probably going to have to see a break back below 118.30. Stand by really quick.
So if we're close to peaking in euro pound, pretty soon the euro is going to be the preferred short after this peak in euro pound comes in. Yeah,
I think I personally think, Dale, that we're not far away from a high there as well.
So what Steve was pointing out is the pound dollar. Okay, our analysis in the pound dollar, and let's go over to basic. It's taking a second to come on over. Oh wait. There it is. Okay, so the pound dollar yesterday, we were talking about. Oh no, this is the euro pound. Let's go over to the pound dollar. It's coming. Okay. Hold on really fast.
Something is bugged there.
Something is. It's not allowing us to flip, Steve. We need to look back. We need to look into that. All right. So yesterday, end of day analysis, the cable is still finding resistance in the ascending wedge. Trend line, as long as it stays below it, there's the potential for a reverse lower.
On the daily, I have the chart.
On the daily, here you go. And so we have this little ascending wedge, and so it really, you know, has played out nicely back to the downside. But remember, it's still, I mean, overall the dollar is still pretty weak too, and that's something we gotta keep in mind before you get too aggressive being on the short side of like the pound. But I think if you see the euro come off, the pound's probably going to continue lower as well. But overall the pound's very, you know, I have to say, and I know I mentioned this the last couple of days, you know, with the euro going higher and the dollar as weak as it is, if anybody's long the pound right now, you're probably pretty disturbed that the fact that it hasn't moved higher with everything else. You know, the euro moving higher. You've got, you know, the Aussie and the Kiwi, which, you know, obviously the last couple of days have really been underperforming. But for the most part, you know, the Aussie and the Kiwi have been moving higher. The dollar Canadian's been moving lower, and then the pound's just been kind of meandering around, not really giving you that upside. So there's a much better, you know, a much better odds at this point for the pound to really come in if we start to see some dollar strength. You know, if the dollar starts to show some strength down here, that might be it. Now, and let's talk about the dollar index really quick. Let me pull up the Dixie.
Yeah,
And
like we talked about that, it couldn't do much in a favorable environment with dollar weakness.
right.
What would happen if the dollar ever caught a bid? And the dollar still hasn't caught a bid. And it's already cracking.
No, it hasn't. But I want to show you like yesterday's price action in the dollar. You'll notice here that we hit a new trend low in the dollar index, and then we created a hammer. Now, whenever I look at it like a candle, especially like a hammer or a semi-quasi, you know, reversal type of candle, what I really like to see is I like to see an opposite color candle. So like in this case, we got a hammer, but I wish this this candle was green. If it was green, I would have been probably loading up dollars, you know, across the board, you know, just looking for a dollar reversal today. But that wasn't the case. So what I'm waiting for today is to see if we get a continuation move, you know, higher. And then if we do, we've got this relative strength that's trying to round. We've got this, you know, the dollar it's trying to round out here. And then ahead of non-farm payroll, I wouldn't mind, you know, being long more dollars as we get a little recovery ahead of non-farm payroll. But we do have non-farm payroll tomorrow, so it's hard for me to get super aggressive long the dollar right now, knowing that tomorrow is such a big day. But that doesn't mean we can't have a little recovery. I mean, I don't think the dollar index is going to 95 today, but you know, could it go, you know, to 93.50? Especially if we have a decent ISM number today. Remember, we have ISM services data coming out here in the next hour and a half. So, and then we have weekly unemployment claims, so I don't think that's going to be much of a mover. But you know, there's a chance that the dollar can recover a little bit today, but a real dollar move isn't going to happen until tomorrow, in my opinion. It's going to be, you know, probably fairly benign at this point in time. But the dollar really, you know, really has come under pressure again, and there's not a lot of signs showing us that it's ready to reverse yet. So sorry about that. I just wanted to get a little bit of a drink. You know, what else have we got going on? So we've got, you know, the euro pound that's on the move. The pound's obviously moving. A couple other things that I should note is the Aussie and the Kiwi really have started to show us some weakness here, and we've got to watch this. Okay, this is the Aussie, and this breakout point comes in at 78.40. I know we're 100 pips away, but this is something we need to watch here in the next 24 hours in case the dollar does rally. the Aussie stopped at 161% extension. We've had this breakout, but if for some reason we come back and break back below this breakout point, that could be you know, that could be a big breakdown going into tomorrow. And here's the Kiwi, same type of thing. The Kiwi had quite possibly a big false breakout over here, and if we come back below this you know, 73.75 level, that's really going to put the kibosh on these you know, dollar or you know, Kiwi dollar longs that everybody thought was a massive breakout. If we come back below here, you know, by tomorrow and close the week back below that breakout point, that's going to be a, you know, pretty ugly price action for the Kiwi. So those are just some things that I'm keeping an eye on. If you use ForexAnalytix, yesterday we closed the pattern in play in the US dollar Mexican peso. The reason why is we hit channel resistance yesterday. You can see we came right up towards 80 cents. Now, Dale, you've been asking me the whole time, hey, have you, you know, did you take some profits here? You know, what are you, I'm sorry?
Good patience, Blake.
Well, if you see, this is where I closed out the pattern play. We hit that channel resistance. It didn't quite hit 18 or the target at 17.99, but we were dang close. And look at the next 4-hour chart.
Close enough for government work.
Yeah, but look at the 4-hour reversal.
Yeah. Nice out.
Yeah, so it was you know, the pattern in play there. You know, even though it didn't hit its target, we were up close enough yesterday at 17.96 where I'm like, you know, knowing that we're at channel resistance, that you just had to be really careful being on the long side. And you know, we sent out warnings. I mean, I did anyway, that it's like, hey, US dollar, the US dollar Mexican peso 4 hours reached a channel resistance, and a breakout of 18 would be very bullish. If you've been riding this bounce higher, you have to start thinking protection at these levels. What does that mean? Well, that means that, hey, you got to, you know, talk about you know, moving your stops to break even. And right after I wrote that, you know, 10 minutes later, I closed out the pattern in play, and then we got a major reaction from there.
Yeah, like the DAX winner. You covered the DAX, and then it exploded too.
Yeah, I mean,
nice.
You know, when you get really
close. Is it, Blake? I mean, you know, when you have these targets, you know, you're within 10, 20 pips of a target. What's the difference? You know, I mean, I've seen so many people give up big profits trying to squeeze the last 10, 15, 20 pips out of a trade. And to get those last 15, 20 pips, you'd be surprised. They don't even move their stops, and they're risking 50 pips to get the 20. And so, you know, I want to bring it across to people that, you know, it's not a profit till you take it.
Well, yeah, and that's a great point. And let me also point out, Dale, I nor anybody else at ForexAnalytix are doing any type of sorcery or magic, or you know, have a special algorithmic program. We look at charts just like everybody else looks at charts. So when you have a target, you have to imagine that everybody else is looking at that target as well. So when you start getting close to a target level of where price should, quote unquote, should go, you have to start being careful, because if it's widely known and everybody's looking at that same price, you know, everybody's going to be thinking the same thing we are. All right, well, if everybody's looking at that price, I'm going to go ahead and you know, take my profits before we get there. You know, I'm gonna. Oh, here, wait. We just had unemployment claims come out, by the way. Unemployment claims came in a little bit better than expected. Not much. It's not going to be much of a mover. But here's the dollar yen. So dollar yen's not really doing anything. No real reaction there. But but again, what I'm trying to point out is if everybody's looking, like for example, if everybody's looking at these technical levels and they're like, oh, you know, here's some resistance here, here's some support here, you have to imagine there's going to be buyers ahead of that support, there's going to be sellers ahead of that resistance. So if we don't quite make it up there, those are the reasons why. You know what I mean? So
I kind of have a theory when there's unanimous opinion about some type of price level, it either never gets there, or if it gets there, it becomes meaningless. It cuts right through it. I've seen it a million times, you know. So
but you're right. When there's a consensus view, you know, the chances of us actually hitting that, especially in a range-bound environment or in the summer where there's less liquidity, you kind of got to take things early if you can, because there's not enough liquidity to really push the market through those major levels many times. So
someone's saying USD note bottom, like Tom Lamb.
Well, yeah, you know, the US dollar Norwegian krona, it's trying. You called it yesterday, that three wave drive. That was a really good call. Now, what we have to see in the US dollar Norwegian krona, this is it. I mean, this is bottom line. We got to see it above that resistance, and if we see it above that resistance, then we have a good basis of a much bigger move higher if that breaks right there. But is that going to break today? I don't know. You know, I'm not too sure. Is it going to break? You know, is it going to break? You know, tomorrow? We're not sure.
Everything's going to happen tomorrow, I think.
Yeah. I think so. I would have to. Sorry, I didn't sleep very well last night. I think so. But well, guys, I don't have much more to talk about except, and I'm going to leave the cross rates so Steve has some things to discuss. But I will say that ISM is going to be, after today's ISM, I assume that the market is really going to slow down. So that's in about an hour and a half. And once that happens, everybody's probably going to retreat to the sidelines ahead of tomorrow's NFP. So just be careful trying to chase things around this afternoon. I think the market's probably going to, I mean, what I'll be doing is basically I'll be mobile, and I'm going to try to step away from my desk and just keep my phone around me just so I can watch quotes while I'm doing other things, because these are the times I was telling some of the traders that I trade with, it's like these are the days during these summer days where I'll run around my house and I'll say, okay, well, let's go rearrange my sock drawer, you know, let's go you know, fold all my t-shirts, you know, and just do busy work, because it's better that I do things like that than sit in front of the computer and get tempted to trade, because there's so many false breakouts. Things tend to be pretty quiet. Now, that it may be different today, but for the most part, summers are like that. So I like to just take my mobile device with me wherever I'm going and just kind of monitor that way and step away from the screens a little bit. So yeah.
US dollar risks ahead of the NFPs tomorrow, in your opinion, tilted to the upside or the downside?
Well, I just passed it to you, Steve, the presenter to you. I think the risks are actually to the upside. It doesn't mean we won't have a bad number, but I think that the dollar is so oversold that even on a bad number, the dollar may initially have a jerk lower, but I think the jerk lower is going to cause some buying. So
I agree 100%, and that's the first point I wanted to make, that it's one of the first time, you know, with the dollar being so oversold and pricing in, you know, so much negativity. I really believe that the risks, of course, nobody, you know, as you said, nobody has a magic ball or whatever. Although I do have next to me trading dice. I'm kidding. I think that the risks for the dollar are to the upside. I mean, if we see a good number, or even if we see a jerk of reaction and the weird sell-off, I think that probably longs are not a bad idea, especially with sentiment being what it is, etc.
I don't know if I'm going to go into. I don't know if I'm going to go into tomorrow with a short euro dollar. I think it depends on how the euro reacts today. If we close the day down at 118, I'll probably hang on to the euro. But if the euro's around here, 30 pips away from here, lower, I might just close it out. And then if we have a bad number tomorrow, you have to keep in mind that as something we talked about earlier this week with Stelios is that the market knows that we've got quote unquote we're nearing full employment. So even if the number is a little weaker tomorrow, I think the reaction in the dollar, as long as wage growth isn't too horrendous, if the dollar does weaken, I'm going to be buying the dollar on a dip tomorrow. So that's my approach tomorrow. But we'll be here for NFP, so it's going to be a big day tomorrow. And you have a really good guest, Dale, tomorrow, Chris Laurie, which I have done work with in the past. We've filmed together on set. I've done a training event with him in Florida about 5 years ago. He's a really sharp cookie and a really great trader. So it's gonna be pretty cool to hear Chris. I'm gonna actually step in and say hello.
Blake knows everyone.
I don't know everybody, but I have worked with a few people in the past. So Chris would be one of them. We did some filming maybe like 10 years ago. So he's a sharp guy.
Yeah. Okay.
All right, guys. Well, have a great trading session, and thanks, Steve. And I'll pass that over to you.
Okay. Yeah, I already have. Bye, Blake. Okay.
Hi, Steve. How are you?
I'm okay, mate. I'm okay. Okay, I think we have quite a lot of things to talk about in the cross rates because we are seeing some very interesting reversals today, and I think potentially also very nice trading opportunities. But before we go there, because I know that we always have questions about the stocks, the only thing I have to say is that SPX, for example, you see this kind of consolidation. I mean, what we're seeing in stocks at the moment most likely is not like a prelude to to a move lower, but most likely is going to bring another push higher. Okay, so this kind of multi-day consolidation in a short range is of the kind of situations that more times than not bring out upside reversals. Upside continuation and not reversals. And I expect that most likely, the next movie, even if it's like short-term move or whatever, is going to be in the direction of the trend. Having said that, there is something that troubles me specifically, which is the fact that we've had Dow already given us 1, 2, 3, 4, 5, 6, 7 days higher. While on the other hand, this is IWM, this is the Russell. And look at the Russell. We had seen this chart some days ago, Dale. I don't know if you remember. And this divergence is glaring because the Russell, which is smaller capitalization companies obviously than the Dow, is breaking below an ascending wedge, while the Dow is hitting one record day after the other. It has even overthrown this ascending wedge. And
fundamentally, it could be because a weaker dollar is better for the transnationals, which is the Dow.
Yes.
And a weak dollar is not good for the domestic. The Russell does better with a strong dollar.
Yes, that's a good point. But I remind you that this divergence started just 7 days ago. While how long has it been now that we've been seeing dollar weakness? Months, right? So although what you're saying is a really
well, I mean, if you look at the ascent of the Russell during that time period, it was also a laggard during that period.
Yeah, so, but it was still climbing, huh?
Yeah, but yeah, I'm just talking relative strength among indices.
Oh, you're right.
And the dollar effect on those. That's all.
Yes. So anyhow, despite that divergence, as I said, even the Nasdaq as well. I mean, this is more likely than not a triangle, and
Yeah.
we've seen together plenty of times. How many times do you remember me saying just on this webinar in the what is it now, 4 months that we've been going on, that this is a triangle and triangles break to the upside? How many times do you remember that not having happened? I mean, triangles actually not breaking to the direction of the trend.
0.
Yeah. So of course, statistically they're not 0. It just happened that every time we said it, until now was 0. But I will tell you, from experience, that the percentage that triangles do not break to the direction of the trend is very low. So, in this case as well, I would expect that the next push is more likely than not, and this is purely statistics. It's not like a personal opinion. And even seeing the move below, I mean, we have a very strong drive higher. And then instead of managing to break down, we get a very nice day, a very nice outside bearish candle. And then instead of getting continuation to that, what we get? Consolidation within the price action of that one candle. So unless this breaks down like now, immediately, this verifies, the triangle interpretation, and that should bring at least one more push higher. Okay. So that's that's my point here. So you need to be careful, because one more thrust higher is more likely than not from what we're seeing at the moment. But now let's go back to the FX world, because we're seeing some nice stuff here. First of all, already people have mentioned it. Trump says ties with Russia at all-time low, blames Congress. Okay. Okay, that's interesting. Glenn just wrote that. Okay, I'm not sure if Trump is actually angry with that, or he's just trying to prove something, but whatever. Now, having to do with the USD CAD, it did reverse from the level that everybody was watching, okay, which was this low. We're still within this descending channel, okay. And my thesis remains that the first reaction higher from here, even if it takes us all the way to 128 or even higher, 128.70 here or whatever, is going to be a bull trap. So I do believe that this rebound might have more legs to run, and the same applies to USD NOK, because we had a friend commenting that before. Here we are, actually USD NOK looks less likely to rebound. I mean, it looks to be lagging the rebound than USD CAD, but the same thing it did in the move down. But yes, a reaction back to 8 to the 8 level for USD NOK is very likely. But I will be looking to sell into these reactions, because I believe that the market is not done with the downside in either of the two cases. Now, we had a friend here asking, I think, about the pound Kiwi, but even if it wasn't the pound Kiwi and it was the pound Aussie, it doesn't matter, because we're going to cover them both. Actually, we're going to cover even the pound CAD, and I'm going to begin with pound CAD. This is what we had drawn on the pound CAD, like obviously when we were there, and obviously together, because that's when we do it. And I said we had reached the target back then, which I don't have anymore because I changed it. I mean, I can show you which target we had reached. We were approaching the 161.8. So I said that if the move lower continues, we can expect to see a rebound to perhaps this consolidation, and then a move lower to test this support level. We did get a continuation of the move lower. We did get a rebound, and where do we get rejected today? Almost at the 200 DMA. And today's candle in the pound CAD is an outside black candle. Okay, it's also bearish engulfing. So this is a very, very strong indication that we might resume lower. So if you were long this pair, my suggestion is that you should be very, very, very careful, because today's candle is one that more likely than not indicates a reversal. Okay, pound kiwi. Pound kiwi once again tested this area. Let's mark it. Okay, once again tested this area. Once again, it just reversed. So the pair is trapped within a range since the 9th of June. Okay, so we've been in this range for now almost, I mean, we're approaching 2 months that we've been in this range, and every time we hit the ceiling, we get big rejections, like we got here, like the one we're getting today. You know, you need to be very, very careful here, because something is at play. This trend line, this ascending trend line held a few days ago, but you know, if we see another move towards the bottom of the range and this trend line, you know, just breaking, then more likely than not, we're going to see another leg lower. So, you know, be very, very careful. We cannot be bullish this pair as long as we fail. We keep failing in essence of, you know, let's say closing above 179. So as long as we don't close above 179, at best, I would be neutral at the moment, having seen that initial rejection up there. If I remind you that we wrote an article and we were bullish when we were seeing this break above this wedge, but then, you know, the fail at 179 and another fail today, you know, puts this thing in context and, you know, makes me very, very cautious. Same deal if you see here with the pound Aussie. The pound Aussie was trading in a descending channel. We tested this channel again. We saw a reaction, but having reached, you know, a very important horizontal support resistance zone, today we are also seeing, you know, a huge reversal. Just look at this. Also, the 200 EMA was here, right? So this was a very important zone. This important zone is actually rejecting price action again. So I would be very, very cautious with the pound crosses. On the other hand, if you go to the equivalent euro crosses, the euro Aussie gave us a perfect ABC correction. We had marked that since then. We even marked back then when we saw this this rebound from here, because it was, you know, a horizontal zone. It was the ABC. The 200 EMA was just below it. It was the 50% fib. So, you know, we had a triple confluence here. We said that this thing might even break to new highs. And, you know, so far, so good. Obviously, there is a trend line, you know, that some people might be watching, which is this one. And today we seem to be bumping our heads on it. So, you know, a little bit of caution here, and let's see what happens. But other than that, the euro Aussie for now looks constructive. The euro kiwi, the same. We marked there that we had a triangle break, and we said that, you know, the triangle break should at least, that's what I thought, give us a move to test this zone. We are almost there. We're almost there. Okay. So euro kiwi doesn't look bad either, and euro CAD has obviously rebounded very strongly. I'm now completely out of position, by the way, because the other half of my position got stopped out in profit, you know, after the move higher. And now I have to say that EuroCAD is testing an important zone again. So, you know, if you were long waiting for a reversal, you should probably be a little bit careful here. But there is also the chance, it's a high chance, that this was simply a correction lower, an ABC, which we had noted since the beginning. It never reached our target. It almost did. Our target was just a little bit lower, and this was a, you know, a very nice trade. But there is a chance that it has even it has even finished, and we might even see more upside. I'm even seeing the potential of an impulsive move higher here. So, you know, if I see something like this, you know, if I see something like this, then I'm going to be more than likely convinced that this move lower was simply corrective, which anyhow was our initial consideration, and we might be heading to new highs. Euro NOK, I'm out of this as well. I took profits in all the positions simply because, as I've said plenty of times, it seems that CAD has been leading the NOK. So, it is likely that we're going to see a bigger reaction here as well. This was a nice trade though as well. So if you enter a trade, at the right juncture, I mean, we entered, at the break of this wedge, and still it gave us, even if this move proves to be corrective, it still gave us, a big enough move to be happy with this trade. So, it's all about managing your reward to risk ratio, and you should be fine if you have a good signal to enter a trade. So in general, euro crosses are doing very well. Obviously, the euro MXN, Blake showed that as well some time ago. This was a triangle. We broke the triangle to the upside. Okay, we obviously had two potentials here. One was a continuation lower from up there. The other one was a break higher. We got the second one. We're now testing some resistance. So we'll see what happens with this as well. I have no position here, and I prefer other pairs because this triangle, my initial expectation was of a continuation lower. It didn't happen, but that does not stop it from being another kind of a triangle, like a flat top triangle or whatever. So I'm still a little bit skeptical with that. We'll see. So I think we visited most euro and pound crosses. Obviously, they also show the divergence we have, which is very clearly depicted in the euro pound. Yesterday, just we said, that this thing looks like it wants to move higher. Most probably, it did. It does. It's even above the 78.6 at the moment. But still, the move higher remains in my mind a little bit unimpressive as well. I mean, like we saw in the cable, Blake showed it before. The analysis we had and we had written is that this kind of overlapping ascent. Yes, it wasn't bearish, obviously, but it didn't have the impulsive nature that you want to see in a strong uptrend. And I would say that the same thing applies for euro pound. I mean, it is moving higher. There's no question about it. But does it show the momentum I want? No, it doesn't. So my gut feeling tells me that a top is not very far away there either. Now, let me see some of your questions. Luca, yes, we're going to see that. So I'm long USD CAD. No, Zach, I'm not. Yeah, you're kidding. I just saw that. Yeah, Japan's new economic says it needs supply side measures to ensure sustainable economic growth. Time to sell yen, I guess. Says Luca. We'll see, Luca. I'll show you the USD yen. Steve, your triangle set up on the pound kiwi played out to the top side. Yes. Excellent call on kiwi yen from Monday, I believe. Thank you. Trump says ties withdraw. Yeah, we saw that. Okay, so let's have a look at the Bund. Sold Bund 163.15. Luca, let's see. Bund. Okay, I see what you're seeing. We are again on top of this channel. Good luck. I'm not. I'm a little bit skeptical. I mean, even from an Elliott wave perspective, I would probably not find it impossible to see. Let me show you. Let me extend this channel and show you what I think, Luca, we might get. I think that we might get something like this, like a double zigzag. So, Luca, we might get something like this. And then this. Like an ABC X ABCY. You know what I mean? So, or even up to this level. So I'm a little bit skeptical. I would most probably, as I just said, would want to see a little correction, another push higher, and then the big reversal, since we did not reverse from there. So it looks a little bit incomplete to me, Luca. I don't mean that you might have top picked it. There is no question about it. I mean, there is always a chance. But I would like to see one more thrust higher after a little correction. Okay. But we do agree that I still believe it's bearish once this subside correction finishes. What do I think about oil? That's a good question because it's something that we haven't seen during the past few days. What I wrote about oil was the following. We expected the rebound from here for whoever was there. We had even warned that an initial sell-off is going to be a bull trap. That happened as well. And then I expected the reaction either from the channel resistance or the 49 level, which was also at 48.89. We had an ABC perfect target. After we actually breached above these two zones, what I wrote at some point in the analysis is that if we see a move lower, which we did see, and this move holds this zone, then I have to remain constructive, and this is exactly what we drew. Okay, so my answer simply is the following. As long as we hold this zone, I find no reason not to remain constructive. I wouldn't be long up here, if that's your question. I wouldn't be long anymore, but I would definitely not be on the short side as long as we fail to break below this zone. So, I'm neutral to bullish, let's say, but not bullish enough to commit in any way. Okay, so that's my view. Now, gold and silver. First of all, gold had a flash crash yesterday, a mini one. Actually, coincidentally, I was on Skype with Blake for some company things, and suddenly he's like, "Oh my God, what's happening to gold?" And the move on gold was so fast that actually, when I turned my eyes on the screen, the quote, the gold quote here on the right-hand side, was still saying that gold was at minus 0.1%, while the candle had already moved lower, and it took a couple of seconds for the price to adjust to minus 0.6. So in essence, we saw like a 0.5% move lower in gold within a matter of a couple of seconds, which it was the usual illiquid hours and the usual time that you see these, let's call them suspicious flash crashes. Okay, but having said that, I will have to say one thing. First of all, gold did fully recover, as you see, that kind of a price action. Second of all, ignoring this stupid flash crash, this looks like a pennant to me. So I wouldn't be bearish gold here. I mean, the price action isn't. This looks like a bullish consolidation. Okay. Especially as long as we hold this zone, which is, its mean is at 1,257, 58. I wouldn't be bearish gold.
I've always believed, Steve, that that pros take markets down to accumulate it, take them up to distribute it, and every flash crash has been a buying opportunity in the last month or so in the metals. It's almost like they're taking it lower so they could get long at better levels.
I don't know, because that didn't last long. I don't know why they're doing it, but the times of the day that these moves happen are weird. You know what I mean? They are very weird, because as we've said plenty of times with Stelios as well here, if you legitimately want to sell a big quantity, you would never do it in one
Thin
trade
market conditions. Yeah.
at a very thin market condition. I mean, it's counterintuitive. It's stupid. I mean, it hurts your P&L. Why would you do it?
Just my opinion.
And if you remember how long ago we've said it. How many flash crashes have we seen in metals? Plenty of them, right?
That's why I'm saying that I think they're taking it down. Maybe they're short into it, and they're taking it down to levels that are more attractive longs.
I don't know, perhaps, but oppositely.
I'm a conspiracy guy. Okay.
Have we seen even a single stupid move like that to the upside? No, we haven't, right? All of them are to the downside, no exception, correct? So silver, on the other hand, is lagging. If you remember, Dale, we were here together. We were testing this zone, and I said that I expect silver to show a correction at the very maximum. I remember that those were my words, at the very maximum, so from 1720. We didn't reach 1720. Anyhow, I said that at the very maximum. And we have seen yesterday's candle actually was an outside black candle. You know, this is quite a bearish candle. Today we're seeing a little bit of a recovery, but I mean, it's more than obvious that silver is underperforming gold. So at the moment, if you want to be long one metal of the two, your choice would have to be, gold. Okay.
All right, Steve, it's interview time.
Okay. The rest of the questions tomorrow. Thank you, Dale. Enjoy your interview.
Okay, thank you, Steve. Thank you, Blake. Thank you, Face. Everyone thanks Steve for never abandoning his post. Hello, Greg. I see you in the house. I'm looking forward to speaking to you. I'm making you the presenter so that we could hear your voice and you can share your screen. Face, welcome Greg Schnell to our community. Currencies through an intermarket lens by the Canadian technician. How are you, Greg? Waiting to hear you.
Let me just crank up my mic volume a little bit. There we go.
Great, Greg. Great to meet you.
Yeah, thanks for having me on. Interesting community. I don't usually speak to a Forex group, so this will be good. I've got hopefully an interesting presentation. Tried to do something a little different. You guys probably analyzed the currencies pretty thoroughly, so I'll try and do it a little differently from a different angle, and hopefully at least provide some different perspective into the U.S. dollar and some of the other currencies.
That would be great, Greg. Like I said, anything on your radar, we cover everything. We cover indices and commodities and bonds as well. So appreciate you taking the time today. I'm always interested in how people got started in the business, who influenced them. You're a technician. Early in your career, were there any books that influenced you? Can you tell us about the early part of your journey and to how you got to where you are today?
Well, I was a geophysical technologist early in my career, and then left Shell and tried to get a couple of companies going and did that kind of stuff. And then my wife got transferred to Europe with Shell, and I became a house husband, which gave me time to analyze the markets, which was nice.
Nice.
So I did that for 4 years in Holland, living in the area near The Hague, Netherlands, and that was really outstanding. So I started to get really interested in Investors Business Daily in 2006, 2007, and bought Apple almost on the top tick. I was probably the last guy in, and proceeded to ride it down into February, losing about 20% and just going, okay, I'm in the company that just came out with an iPhone and I can't figure out how to make money in this market. So I felt pretty stupid, and that was really what spurred me on to get into technical analysis. And at that point, I went out and got my chartered market technician from from the CMT Association, and with that, you know, of course, it gives you a list of books to read. And to me, you know, I was sitting out in the middle of Western Canada, not really understanding all of the technical stuff, and that list of books was probably, you know, so thrilling to read. I was reading it, you know, I had no problem sitting down and reading 200-300 pages of that stuff compared to, you know, all of price earnings ratios and that kind of thing. So I pretty much became a technician in the market crash of 2008, and I made lots of mistakes in there.
You know, there's an old superstition, Greg, your Apple trade, that if your first trade is a bad one, it's actually good luck. And the people whose first attempt in the market is successful is usually bad luck. So maybe that played out for you, because, you know, that way you knew it wasn't easy and you had to go back to the drawing board and come up with a method, and especially learn risk management.
Yeah, and I think you know, the biggest issue that we've all had is that 2008, 2009 period all left us quite fearful of the markets for a period of time. I think the ones that were experienced in the room probably, you know, made a lot of money coming out of the hole, and I think a lot of technicians were constantly waiting for another wave down, and that didn't happen. And it took me a couple of years to really get over my, I'll call it short-term thinking, and being able to place some trades and really make some upside money. So with all of that, lucky enough to get into stockcharts.com, and I work on the board of directors in Calgary with the CSTA, the Canadian Society of Technical Analysts. And so anyway, that's how I got to meet the people at stockcharts.com, and I had done a bunch of work for the CSTA by that point in time. And anyway, Chip asked me to come on and write articles about Canada. And so I was doing that for quite a while, and then I was just volunteering it, and then all of a sudden just kind of slowly merged my way into a job with Stock Charts, and we started traveling around the country teaching people how to use the website and that type of thing. And then just slowly, you know, so it's been 10 years just building up my trading experience and knowledge and different perspectives. And of course, I get to work with John Murphy and Martin Pring. They're both writers on Stock.
Oh my gosh, sure. Yeah, Martin Pring and John Murphy. Yeah, I see the influence of looking at intermarket relationships, correlation type work is something that he was very well known for, John Murphy. I think that was his book title, about intermarket analysis.
That's right. So Murphy's written 5 books and Pring's written 20, and I'm lucky enough. I don't get to speak to John as often as Martin, but I talk to Martin 2 or 3 times a week. So
yeah, he's a legend. You know, he has what, those 3 cycles. You know, where does he think we're in the cycle? I'm curious. I think he breaks it down into 3 types of cycles, doesn't he, Greg?
He's got 6. Yeah. Okay. So, and in his cycle model, he thinks we're in a raging bull and ride it. Just get on the train and ride it. Okay. And it's really interesting to be able to debate with him, because I'm not sitting in America. I'm sitting in Canada, so I don't think U.S. dollar centric as much as somebody who's investing in dollars. And so we get
it's a raging bull in what? In equities or the dollar?
In equities, we think the dollar is actually broken, and that'll be a big part of my presentation today. Okay. And how we're going to make the last stand. So maybe I'll just start rolling through a couple slides here, and we'll get into it.
Okay, and we appreciate you preparing something special like a PowerPoint for us. So thank you, Greg. Go ahead.
Okay, so this is a little background on me. I'm a chartered market technician. I did a master's with the International Federation, writing it about the stock charts technical ranking system. So that's one of my go-to symbols that I use. We're not going to cover that a lot today, but we'll get into a few other things. I'm on the Canadian Society of Technical Analysts Board of Directors, and I run the Calgary chapter. And they were nice enough to vote me Independent Analyst of the Year this year. So that was a nice honor. I write 4 different blogs for Stock Charts, Commodities Countdown, The Canadian Technician. 3 of us go together and write Don't Ignore This Chart, which is just a once-a-day newsletter, and Chart Watchers, which comes out twice a month. Obviously, just a disclaimer, anything here is for educational purposes and you're responsible for your own trades. So how to find my blogs and videos, I'll show you that in just a second, but basically everything I do is through stockcharts.com. You can click on the blogs header there. Commodities Countdown blog has 2 links in it. One is a list of 30 interesting charts that I try to keep up, and another is a link to my Vimeo feed, and then I have a Canadian Technician blog as well. So
okay,
we'll go there.
I went to your Vimeo feed. I like Vimeo. Why did you charge that?
Sorry, what was that?
I went to your Vimeo, you use Vimeo, and I went there, and why did you choose Vimeo for your recordings? I'm curious why.
It was Stock Charts who chose it, so they've posted all of their work there, and I don't know what the decision was to go Vimeo or YouTube, but obviously they chose Vimeo, and so I have my own channel there within the Stock Charts umbrella, but yeah, we just started posting there. I want to say roughly beginning of the year, something like that. Might not have even been that long ago, but all of our stuff is recorded now at Vimeo.
Okay.
So this is our agenda today. I'm going to do a big picture on the US dollar and why I think the US dollar is actually in a new long-term bear trend.
So this is not cyclical, because there are a lot of people saying that eventually this is going to be a great buying opportunity in the dollar. You would sell all rallies now. Go ahead.
I would say that the next rally is 4 to 5 cents, just running us up the other way, and then we're in a new bear market. And I'll get into exactly how I think that. And then gold, oil, and metals, the implications across those. There's some big, so one of the things that I like to look for through the intermarket lens with John Murphy and Martin Prink's background is watching that causation. So something happens in one market, you should start to see it in the other markets. And so I'm going to cover that off through some ETFs and international markets and see, hopefully you'll agree that there's a lot of things we're looking for. Quite a few of them have already cracked, the Aussie dollar, the Canadian dollar, some of the international markets have already broken out. So I want to get into that and then specifically cover off how the dollar perspective is covering or hovering over some of the US, because a lot of the international markets have broken out on US charts and not in their home country. And so just want to make sure that everybody's aware that we still have some work to do to confirm that we're in a big global bull market.
That's interesting.
Yeah, so anyway, so we're going to get into that. Okay, so Twitter, you can catch me at Schnell Investor. My email directly is gregs@stockcharts.com, and you can find me on LinkedIn. Okay, let's move on.
You're everywhere. You're everywhere, buddy.
We're everywhere. We're everywhere. Okay, so first of all, let's just jump into, if you showed up on Stock Charts, there's a tab called Free Charts, and from Free Charts is a blogs tab or a webinars tab. If you go into the blogs tab here, that's going to bring up all the latest posts, and over here on the right is all Stock Charts blogs. Commodities Countdown, Canadian Technician are the ones I write on. Don't Ignore This Chart, and Chart Watchers. So just a few in there, but here's the Commodities Countdown. And you could just click on here to see a list of 30 stocks that I keep up. And then here's a link to my video blog. And then Canadian Technician, more Canadian-centric articles. And this is the Vimeo page. So just if you're trying to find me, you could go and grab it anywhere. And hopefully that helps you out. Okay.
Yeah, so check Greg's charts out. They're dynamite. His videos are dynamite. Go ahead, buddy.
Okay, so what I want to cover off today is get into some real meat of the matter. We're going to start with the US dollar, really high level long-term chart. We're actually looking at a monthly chart, and probably in a room of Forex traders that's never been seen, but
we have both telescopes and microscopes in here, Greg.
Okay, well, that's excellent. Well, this is the telescope. And so what we're looking at here is a chart back to 1983. And just let me turn on my cursor. There we go. So what we see here is two big trends in the US dollar momentum, just using a PPO, percentage price oscillator. And basically when those trends broke, they were pretty major. Well, we broke this trend in July.
Yeah.
And so so the long-term momentum of the US dollar is broken, even though we haven't broken support here yet. And so this is pretty critical. But the other picture that's going on in this chart is that we had two big 10-year swings where the market basically compressed and then broke out to the upside. And so far, we've been following a pretty close perspective on this happening. The only difference is now we've actually broken below the upward momentum, whereas in the early 2000s, we continued higher.
Yeah, we held it. Yeah.
Yeah,
Okay.
and so on a monthly chart, one of the big differences that we've got here is you could see in a bear market, we stay below 60 on the RSI and we stay above 40. And here we are right now, and we are at 42 on a monthly RSI, but we have a lot of divergence on the high, and we've broken the momentum. So one of the main concerns, if there's a last stand for the dollar, it's now. But we're going to get into that and just show it in on zooming in on the chart. So what this is this is the same chart converted to weekly. And when you look at the RSI, this is work by Constance Brown, that she did, and what she noticed is that in bull markets, the RSI on a weekly chart will hold above 40, and on a bear market, it will stop at around 60. It won't make it all the way to 70. So this is, again, is a long-term chart here. We're looking at almost 25 years of data. And so each one of these shaded panels is a year. And so in this case, this was a 4-year run in the US dollar as it's running up here, 1997. And then it made a low, which is exactly the level we're currently at in the middle of the big bull market run. So if there's one point of concern, it's right now, and that would be that we really want to see how the RSI behaves going forward from here. But
yeah,
then
so
it went
there
on.
are some aberrations over the ranges you're showing, but they end up coming back within reverting to the mean. So it's the exception, not the rule, for your major concerns.
Very, very much so. And in 2008, 2009, what we saw on the RSI was it literally swung from 30 to 70 to 30 to 70 to 30. Yeah. That is very rare on something as big as the US dollar to go on wild swings like that. Obviously, it was a pretty wild time with the whole global financial crisis, which would cause something that major. But you could see since 2011, which is when we marked our bottom, it took 3 or 4 years to actually kind of declare a bull market, but we stopped hitting new lows on the US dollar and went on to actually give us a confirmation signal. You know, up in here, we were very close to getting a confirmation signal. Obviously, it would have been nicer. We didn't get it, but now we're clearly broken down, not just to 30, but below 30, and that's a very rare.
The glaring divergence between 2015 and the 104 high. You know, I've renamed the RSI to Real Simple Implicator, and confirmed highs normally lead to another price high that may or may not confirm with RSI, and that's exactly what happened in January. It did not confirm. But you knew another high was coming because of what happened in 2015 because of those readings.
Yes, I would
probability.
Yeah. And one of the concerns that we've got in the US dollar is, if you notice that this is a January high. This was very close to a January high. It was December high. The big peak back in 2002 for the US dollar was a January high.
Interesting.
A lot of the major
January goes the rest of the year in the dollar.
Well, not so much the rest of the year, but some of the major highs have taken place right at the end of the year. 2005, it was right at the end of the year. Obviously, 2008, 2009, this was just flying back and forth. But there tends to be either a July high or a January high of consequence in a lot of the years. So I would say that if you go back and look at some of the videos I produced, you'll see that there was I was really watching for a high in the currency right at the beginning of the year, and lucky enough to call that one right. So
Yeah, lucky.
I'm very lucky.
You know, why don't you just say this? I'm so proud to announce how humble I've become.
Well, the only thing I know is that we're only right every now and then. So
Yeah, okay.
anyway, when we zoom in on this weekly chart, what we see here is, you know, just one of the big clues now is that the momentum is living in a much lower range, and having that big change in momentum is very, very important. So in the last 2 weeks here, we've got a confirmed new bear market signal because we touched 30 and went below it. So just by Constance Brown's work, we're in a bear market for the US dollar. The worst part is of a US dollar bear market is we're at the lows, and we would expect to bounce from here, but that bounce would be a bear market rally continuing to lower lows.
Okay, you have any long-term targets on this move, or do you don't even get involved in trying to be Nostradamus for?
You know, I haven't. Targets? I don't try to do the target thing. I would be, you know, I'd be looking for reversals in momentum, and a lot of the presentations I'm going to show here are talking specifically about the change in momentum on a lot of these charts, and the fact that they are changing, and so. We would assume that the new bull market's probably got years to run in the other currencies and in the other markets if the US dollar has in fact topped. And you know, we could always have an ICBM or something land somewhere that would change things, but based on the charts that I see right now, it looks to me like the rest of the world is trying to rally, and quite a few of these charts point to that. So here on this chart, I have the Canadian dollar in green, and I have the price of crude in brown, and obviously there's two different scales here, so they don't correlate directly. But what you see is that the Canadian dollar tends to lead crude, and it could be because currency traders have a lot more leverage, and so they probably have to make a decision a little bit sooner. But recently they've broken the Canadian dollar out of the whole downward lows that we saw coming off the back of oil, and so having the Canadian dollar move to new 6-year highs in momentum probably suggests that the lows are in for crude. Now, whether it takes another couple of months to work through that, I have a whole bunch of charts around that. But the big issue here is it would appear the Canadian dollar signaling that the low is in for crude oil as well. And you can see that we got a bull market signal on the Canadian dollar last year, pulled back. Didn't feel like a bull market at 72 cents, and then now we're off to 70 again. So the Canadian market has definitely started to turn and is in a new bull market.
Okay. Concur.
Okay. Here is the CRB, and what we've got for the CRB, this is a 45-year chart with the Commodity Research Bureau, and one of the big problems with this chart is that this is monthly, and one of the big problems with this chart is we recently broke through 45-year support. So what is it that is making commodities cheaper now than at any point in time in the last 45 years? Pretty major implication. So there's a lot of people that think there's, you know, lower lows coming in commodities, and if there is, we're in for one hell of a deflationary cycle. But one of the things that I noticed is that the commodity markets tend to bottom in pairs, like they come down, they retest their lows and then take off. And so here we are, we don't have to get all the way back down here, but you know, we've got to 166 versus 154, and we spent quite a bit of time at 166.
It's a higher low.
It's a higher low, and a breakout from here would suggest a big new bull market. So you get your higher low, you've got your divergence with the US dollar, and the US dollar starts to break down, and that should send our commodities rising. So one of the things I'm looking for to confirm my US dollar call is that the commodities actually start to rally from here. So the next few charts are going to be about commodities and how they look to be setting up. And so getting into the CRB, this is, you can see that on the CRB weekly, in the last couple of weeks, we've broken through the downtrend that started when oil topped back in 2014. We still have a bear market signal on the RSI. We touched 30 in June, so that would suggest we're still bear market. And that's one of the concerns I have, is that if we're still in a bear market for commodities, even in a US dollar bull market, or in a US dollar bear market, we're really in trouble here. We're probably going to have a big deflationary event. I'm not predicting that. I would suggest that there's enough animal spirits out there that this will actually probably start to rock to the upside. So we're breaking the downward trend here. We're testing the 40-week moving average right now. US dollars at support, so some rally here would be expected. But again, the scale of that rally would probably be smaller and maybe up into the 97-cent range. So in looking back on the US dollar chart, the previous bounces were about 5 cents.
Yeah. Okay, interesting.
So this big downtrend here in the CRB is just being broken in the last couple of weeks. And obviously we got a lot of overweight pressure here with the trend line, the 40-week moving average, previous highs, a year of consolidation. There's a whole bunch of pressure there to get through. But so far, it looks like we're getting there. And one of the things I like, I think I've got it on the next chart, is, I've just left this line hanging in the middle of the air here. And the point I want to make on this, because when I add it onto the chart, it kind of, when I add it onto the chart, one of the things we get is, it looks a little muddled. But what I like is the downward momentum that we've been under for the last 6 months in the commodities has started to break.
Yeah, you're getting across. Yeah.
And it broke very close to the lows. And so I put a zoom panel over here and we can see that this is broken out just in the last couple of weeks.
That's
so a really interesting place on the chart, and getting that breakout I think is pretty critical, and obviously crude turning up is a big part of it. The thing that I think is happening is all of these commodities have taken time to adjust to the new bull market, but literally it shouldn't be avoided. If the US dollar is in fact going into a new bear market, this is probably one of the most exciting times to get long some of the commodities. So
any the subsectors look more appealing to you? I know that grains were down. If there's any kind of trade friction between Russia and us on sanctions, it affected the grains. Does the energy and metal sector look the most promising to you, or are soft commodities a part of it?
So far, it looks like industrial metals are the nicest chart, and the main
copper.
I have a chart with copper coming up here, and those charts really start to look appealing, and I'll explain why. This is the DVC, so a US dollar-based ETF tracking commodities. And what we see is we still have an uptrend off the 2015 low. So momentum is improving, but still hasn't broken out. And obviously, it wouldn't take much to get this chart to go bullish. But again, it's still in market mode on the RSI, so a little bit concerned there. So that's a critical component. This is DBA, which is the agricultural ETF, and it's really trying to break out here.
Yeah.
But it's broken support twice. Not a sign I want to see. I like one test of support, not two. So anyway, we're trying to hang in here.
How about 3 tests of support? Do you become very jaded then that Mr. Market is giving people too much time to think about buying a breakout? You didn't do it 2 weeks ago. Here we are again. I'll give you, Mr. Market saying, I'll give you another chance, and then it comes back again. You know, when the market makes it too convenient to react, you become skeptical.
I do. Yeah, I think that it's a dance floor, and sooner or later you fall down, and so enough taps on the floor, and we've got a problem. So the big we've got, kind of a 3-year wedge building in momentum. And so we're very close to either breaking out to the upside in momentum or breaking down again. And obviously a breakdown in momentum again would be the deflationary picture. And again, on UVA, to have the agricultural breakdown, I have some relatives in the business, and internally in the ag business, what they say is there's 7 billion people that need food and we don't have enough land to produce it. So we fully expect the world's biggest bull market in agriculture over the next 20 years, just trying to feed everybody. And so that perspective is interesting, but the charts are saying we're not there yet. And obviously, if things started to break out right here, this would be a great place to get long the ags.
Okay.
The fertilizers and the, potash.
So being a Canadian and you started off as a geophysicist, do all of you guys in kindergarten end up with like blood or gold dust on your desk and you're all interested in natural resources?
Well, if you're a trader in the Canadian market, pretty much. I mean, unless you live in Toronto, there's, we've got 5 major Canadian banks in Toronto. We have 3 other banks, Laurentian, National, and Canadian Western Bank. Yeah. So roughly banks. That's not really like the U.S. And
yeah, you guys actually, you're right. You have a natural affinity for natural resource markets, I've noticed.
Yeah, so, I think we have 700 companies on the TSX, and 2/3 of those are in the energy or oil field services or mining or drilling or diamonds or gold.
Yeah.
Yeah, so it's a pretty big component, and so a lot of the juniors that are traded on the venture exchange and that kind of thing all come through those industries.
Okay.
So here's copper, and what we like about copper is the momentum has been improving. We've actually turned up above zero after being below zero for years, and so this first wave up tells you things are getting going, and right now we're bouncing and breaking out to higher highs. So copper's hit a new bull market, and that's one of the reasons that I really favor the material. So that also would suggest that the US dollar is confirming its new bear market status, having copper break out to the upside, because copper's been called Dr. Copper, but it hasn't really reflected it in the U.S. market at all.
No, I mean, I was watching copper go down, and the other statement about copper is all bull markets are roofed in copper. And it was one of the biggest roofs I've ever seen in my trading career, and it meant nothing.
Yeah,
the bear market in copper meant nothing.
Yeah. So the next chart I've got is oil, and for some reason oil seems to be important at about 95 million barrels a day. What we see here is this RSI is trying to break out the downtrend, so that's interesting. On the momentum, so again, monthly chart, on the momentum, we're trying to break through this downward momentum, and if this was to break now, that's probably the biggest, best bullish sign we'd ever get, that's a confirmation that the commodities are ready to go higher. And this would be a great place to get on board. When we look at the US or at the West Texas crude, the big problem we've got obviously is a series of lower highs and lower lows. And now the real question is, does this go all the way down and test 1999, or do we hold in here, make a head and shoulders bottom and fly out of here? And the RSI is starting to signal that might be the call, but obviously until we get above 50 on a monthly RSI, we don't know. But I would just say the change in momentum here would be important. So I'm watching crude with great interest for the next couple of months. I think that's probably one of the biggest areas to watch. And here's gold. And one of the things we see about gold is it made its last RSI low on a weekly chart in last year, and now it's making a higher low. And normally, again, if it's going to start bouncing off 40, that's pretty bullish. What we want to see now, obviously, is it go up and tag 70. So what we got here before was we had a RSI signal saying bearish market, swung to a bull market, stayed up there for a while, went all the way down to a bear market. We've shown that in the other charts. But the important thing here is that we don't seem to be making those RSI lows anymore. And so this is a really important place for us to watch. And again, that trend line is about to be broken there. And on the momentum trend line in the PPO, the percentage price oscillator, similar to the MACD, it's just in percentage terms. The big picture here is that gold couldn't be more sensitive right now. Really at a critical point. And obviously, there is no momentum line down here that makes sense anywhere near here. So if gold rolls over and goes down hard, you know, I think we could go all the way back down and test, you know, big lows in momentum, like down another 3 or 4% from here, which would be a pretty big stab lower on gold. I'm not expecting that, but
do you prefer to trade the ETFs, Greg, rather than the futures? So you like the commodity ETFs as a trading vehicle? Less margin, less leverage.
Yeah, I don't use a lot of leverage. My life has a
less leverage.
Yeah, I like to put my trade on and be focused on it, and so I don't bother trading in leverage.
Okay,
that's a big probably change for
that's fine. I think it's smart.
So here is GDX, and this is a different chart than gold, and the reason it's different is look at this momentum trend. Remember, in the gold momentum trend, there was no upward sloping trend. In the gold miners, we have a nice upward sloping trend, and we're just trying to hold above zero here. So we still have a little bit of room to the downside, but a push above zero right here would almost confirm, you know, especially after that big move we got in copper, having gold break out in the next couple of months. And one of the concerns I have is that 5-cent pullback in the US dollar. So I don't know if we have to wait until October. So the dollar runs up 5 cents, kind of puts pressure on all of these things. And then all of a sudden we get a fall breakout in almost everything. So that would be the real question. But the one thing I like here is the miners have a much better upward momentum trend all through this bear market. And, you know, we can all see pretty much a big base building here.
Yes.
Okay.
Like that. Do you come from the school that the shares lead the underlying commodity? So you want to see better performance in the shares, more relative strength in the shares to lead the underlying commodity higher, or vice versa?
That's exactly what this chart is saying. And so here we are, the gold miners versus gold. And thank you for the lead in, because that's exactly what we're talking about. Is this trend line break here in 2016 on higher momentum was an excellent reversal. And as we went all the way up here, obviously we got into positive territory. Now, we're still making a higher low at this point in momentum. I would just say that it, you know, it doesn't get much thinner than this, but we really don't want this chart to start to break down a whole bunch lower.
You know, I was thinking, Greg, if we got that puke job you're talking about in gold and it retests the lows, these shares will not, or the comparison will not, and that would really be a huge macro signal. Just should the bear case emerge one more time, the shares, I don't believe, will confirm the bullion move.
The one thing we do have on this, so the RSI ratio that we've been talking about, has given us a bull market signal and continues to hold above 40. So this would suggest that we're out of the bear market mode in these. And it did not get up to 70 all the way through the big downtrend from 2012. This is rare earth metals ETF, and one of the things I like about it is obviously it's thin, and it's much more sensitive to global economics, and it's really starting to break out to new highs. So rare earth metals will probably all remember the rage that they were on, but we've now clearly got a bull market signal in rare earth metals. It's back up over 70. This is the stock chart.
Uranium an important part, and lithium an important part of this?
Uranium really is interesting here. I use URA to track uranium. There's another ETF, NLR, but it looks more at the power plant company, so more like a utility company, whereas URA is more about the uranium miners, and we're still waiting for the chart on Cameco to really improve. Cameco is obviously a Canadian company, so we're a lot of Canadians are focused on it, but you know, they've got some accounting issues where they've got about a 20-year fight with the Canadian government on how they recorded stuff, and so so that chart is muddled from that perspective. But if we start to see you know, URA chart break out, and I could just pull up a URA chart, let me grab it. What we're waiting for here on this chart is, you know, we had this big surge last year, pulled back, and we're back above the 200-day moving average, but we haven't really broken out. And if I just go to a weekly chart over here, what we see on uranium is this is definitely trying to build a base, and momentum is just trying to bottom out just below zero, which is fine for a new bull market. So looking for this to improve, and this line up at the top here is called the Scooter Stock Charts Technical Ranking. It's currently in the low 10% of ETFs, and if this would start to break out of this low base, you know, usually it's a pretty good place, especially with a positive MACD, to expect great results. So, you know, getting back above the 40-week moving average is a big help. Obviously, we've broken the downtrend, so now we're making higher highs and higher lows. This looks like a really nice place to get on board, especially with the MACD starting to turn positive.
So, Greg, what's your business model? Are you looking for subscribers? Do you manage money? What is your business model to the retail public?
So Stock Charts pays me a wage to write, and I comment about commodities and all that kind of stuff. So the one thing that we're looking for is that Stock Charts is an easy platform to for people to use to keep track of their charts. We've got a couple of exclusive indicators, not proprietary because we tell you how we calculate them, but we have some exclusive indicators like this Stock Charts Technical Ranking. Again, I did my master's on that, and it's you know, we have some stunning indicators. This Stock Charts Technical Ranking really improves my trading, but either playing it as a breakout from really poor or getting into the top quartile of investing or of price action, it can stay up there for months and make you a lot of money. And when that stops being up there, you know, one of the charts right now would be QQEW. The equal weight ETF is just starting to break down, and when it doesn't stay as a top performer anymore, it's a pretty good place to be aware of. So right now this chart's breaking, and that would tell me that
NASDAQ 100. So
NASDAQ 100 equal weighted, yep. Okay. And so not putting all the weights on the 5 giants, and so. This Scooter ranking, you know, you go look through this chart, it's a pretty nice place to pay attention to, and when it can't stay above 75 anymore, usually that puts some pressure on the overall market. So I like it just as a, yeah. So the Stock Charts website that I work with, we have subscribers that just pay a monthly fee anywhere from $25 to $50, and $50 gives you, you know, 100 years of history, and it gives you 500 charts per chart list, and I have 320 chart lists. So I use a lot of the site. I use most of the dynamics on it. We have relative rotation graphs from Julius de Kempenaar. As part of the site. I don't know if you've ever used those, but they're a tremendous tool. So if you just whatever, if I was to go to the free charts page, and anybody can do this, this is free. You could just go in and go down here and grab relative rotation graphs, and this is probably one of the best relative strength tools in the visual world. You can just take this slider and extend the lengths of the lines on here, and you can animate the chart. What it shows is we have the S&P 500 in the middle here, and how the other markets are performing relative to the S&P, and who's leading. And obviously, you know, over the last year or whatever, the NASDAQ, so here's NASDAQ Composite, has stayed on the positive momentum side. Sorry, on the positive momentum side is up here, and on this side is the relative strength ratio. And we can just take this slider and move it, and what we see is the NASDAQ has been a pretty strong performer, right? It just continues to stay in this top right-hand side. It pulls back, and then it accelerates again. So some of these tools are sitting there, and so the model for everybody is to just, you know, use the website and save all your work. So I have
yeah, you have a lot of time-saving features here, and you're a great technician, Greg. I really enjoyed your looks, and I've seen some indicators that I haven't seen before. I want to thank you for edifying our community today, and hopefully we could get back together again and see how some of these things are progressing, perhaps later in the fall, my trading warrior brother.
Sure. Let me show one more chart, and the only reason I want to show it is because sure. I think it's probably critical coming up as we go forward here. I just want to go grab this. These are my chart lists, so as you can see, there's a few of them. what we see here on this one chart is that Europe is, everybody's talking about the big breakout in Europe and that kind of thing. I think this chart is critical, and so this is the Stocks 600, not priced in US dollars, compared to the S&P 500. And what you see here is, considering that market is supposed to be so bullish, we're making new lows in relative strength. And so in a US dollar ETF, some of these markets are breaking out. So EWG is breaking out, EWJ, which is Japan, has broken out in US dollars because the US dollar is falling. But
right. So they're nominal gains.
Yeah, in relative strength terms, they're actually, the European 600 are underperforming the S&P 500 in their own currency. So it's a pretty important clue.
You better send this chart to Jeff Gunlech, who's short S&P, long Europe. Jeff Gunlech,
Yeah.
the bond guy. Anyway,
Right.
Yeah, because he's the other way. So
And
you can
this
help
chart's
him.
Yeah. Anyway, so that's kind of the big thing that I think everybody should be aware of is just that in US dollars, everything looks bullish worldwide. The problem is in real dollars, in their currency, local currency, this is underperforming. The Canadian market's underperforming, the Aussie market's underperforming, the Russian market's underperforming, the Brazilian market is close to outperforming. So those commodity markets really have to start improving if the US dollar is in fact in a big bear market. And watching the relative strength of those markets versus the US stock market, they should start to turn up if this is a new big bull commodity market. So
thank you, Greg, my trading warrior brother. I wish you a lot of success with a lot of the things that you're seeing, and appreciate your time and sharing your wisdom with FACE today.
No problem. Thanks a lot. If there's any questions, you can email them to me directly at gregs@stockcharts.com, and feel free to go check anything out. And if you have any questions, give me a shout.
And also I recommend you follow Greg at Schnell Investor is his Twitter handle, and then you'll find everything else.
Thanks a lot.
All right, nice meeting you. Good hunting, Greg.
Thanks, everybody. Bye-bye.
That's a wrap for FACE, everyone. Good hunting. Remember, don't just count your pips, count your blessings. Ran a little bit over, but Greg Schnell was worth it, wasn't he? So everyone thank Greg, and we'll see everyone for TGIF, which includes the NFP. We'll be here for the NFP tomorrow. And then Chris Laurie to wrap up the week. Good hunting, everyone. See you tomorrow. Thank you, Arif. You're welcome, Kevin. See you, Stephen.